It's 5 o'clock in London, it's midday in New York, 1 a.m. in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 11:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID livestream, Series 22, episode number 3. In the aggregate, that's episode number 129, starts here. What a week it's been for the New York Stock Exchange. First of all, it dropped plans for the natural asset company segment, as that worried a lot of folks. It could establish unproductive monopolies on land across one of the few things that is economically limited in this world of abundance, land itself. Then, of course, New York came under pressure. The NYSE were approached by a number of people because they don't like their listing plans by meatpacker JBS, who may not be the pinnacle of sustainability in the eyes of many onlookers. However, shouldn't Mr. Market decide that, not the mowers of some onlookers? Meanwhile, over in the Middle East, the Gulf Mercantile Exchange will soon be a thing as Saudi Tadawul takes a 32.6% stake in Dubai's DME, injecting new capital in what looks like a rescue for the beleaguered Oman-dependent oil market, with the idea that it will expand into a broader base of commodities in due course. It's been a Magna Carta moment in Asia for investors as Charles Lee's MicroConnect, that's linked to the Macau Stock Exchange, launches its map to deliver due diligence clarity across its portfolio of companies seeking short-term debt financing. And then we come finally to, well, great news for the benefit of all our health. Terrific news from the USA. The CFTC has licensed a two-way derivatives market in health outcomes. The Fapinder Gill-advised IMX Health can launch their MGEX cleared futures market to deliver the world's first health futures. Our guest today, I don't think he's been involved in health futures, but he's involved in every other aspect I can think of disruption and growth. It's John Files. John grew Chi-X Australia, the upstart competitor platform to the massive Leviathan legacy monopolist, the ASX, from 4% to 21% during his tenure as CEO there, and he therefore knows all about how CEOs can drive change in markets. He's been involved in markets across the globe with a strong background in innovation, having launched the first ETF in Europe. That was the SPDR S&P500 in 1993, across what amounts to an absolutely vast experience on pretty much every continent where markets are traded, and also including all sorts of interesting issues in the wonderful world of technology. Indeed, he was a founding member of the FIX protocol, which I'm sure will get mentioned in passing in a moment or two. John, welcome to the show. Marvelous to see you. Where in the world are you today?
I'm actually in Canada, in Whistler, well, just north of Whistler. So it's the Australian summer holidays. So we escape Australia and come to the frozen wastes of the north to experience the wonderful Arctic outflow that we've had recently.
The wonderful Arctic outflow. Yes, indeed. It's certainly been quite measured. We're actually getting a storm today in the Caribbean, which is the tail end of what went through the northeast of the USA just a few days ago. So therefore, that might be why my picture could flutter on occasion, ladies and gentlemen. Very interesting place there for Whistler, although not too close to too many stock exchanges or markets, I suppose.
Well, there used to be a Vancouver Stock Exchange, and there is still a British Columbia Securities Commission. So Canada, sort of fairly uniquely, each province has its own securities commission, although we think mostly of the Ontario Securities Commission, but each province has their own one as well to retain oversight of the financial market. So there is a financial marketplace here.
It's interesting to see indeed, and I presume probably with the number of people who arrive in Whistler, many of them being well heeled, there's a lot of discussion on the slopes about the wonders of investment during the course of a decent day skiing.
Oh, I quite often hear some interesting conversations in the lift lines.
So John, tell me, how did it all begin for you? How did you get into financial markets?
Oh, by accident, same way as everybody does. I was working in the advertising realm as a youngster, and a friend of mine had just joined this new company in London called AP Dow Jones Telerate, and persuaded me that I should come along and have an interview there. And I did, and that was how I got into it. And I remember on I think my second or third day in the job, I was on the phone, and somebody stood behind me and blew a trumpet down my ear. and I was trying to apologize to the client for this sound, and that was the famous or infamous John Jessup. But for anybody who wants a good read, he wrote a book called Tales from the South Pier, about the genesis of Telerate, and also with his own background at Reuters. Because after Telerate, I had a short stint at Telerate and then moved to Reuters for a while, back in the day when screens were green and keyboards were metal. Some would say not much has changed since. But.
Well, it's incredible. As soon as you mention the word Telerate, the instant thing springs to mind is, I think it's page 910, which, if I remember correctly, was Telerate's page of T-bond prices, which was something that one of my early jobs was actually to make sure that page 910 was always displayed on a particular screen in the corner of the room. And that was, of course, in the day when screen, as you would well remember, was a very, very large rhomboid piece of technology, which if it fell on you, it would kill you, and was held by a hawser, not dissimilar to something that they use in order to hold up Tesla moon rockets these days before they're launched. Yeah, that's an incredible background. I mean, good grief, all those years ago, that must have been almost before Reuters entered its sort of generation of perma-crisis. So quite fascinating. So how did you go from Reuters and working on the sort of the vendor side of the market into the more hardcore world, if one may put it that way, of broking, dealing, exchanges, and so on?
So it was kind of indices that got me there in a way, because after Reuters, I was hired by Standard & Poor's, originally to run the CompuStat division to set up the CompuStat division in Europe, but then later on to be sort of head of product development for the whole Standard & Poor's product range in Europe. And that was when we launched the Spider with State Street. And so I was responsible for rolling out the Spider to institutional investors in Europe, who surprisingly, for a product that everybody thought was going to be very retail focused in the US, became immensely popular with institutional investors in the UK and Europe. And I spent 7 years at S&P and got involved in the index business there as well. And then I was hired by the FT, or what was then Extel, which is part of, it was called FT Information, but it was the old Extel, to run both continental Europe for FT Information, as well as what were then still the FT All World indices, the old Wood Mackenzie indices out of Edinburgh. And then a couple of years later, I was asked by Morgan Stanley to move out to Hong Kong to run MSCI in Asia. So initially moved out to Hong Kong in '96 with Morgan Stanley to run the MSCI business, launched a number of indices or index futures on CIMEX as then was, including MSCI Taiwan, MSCI Singapore, or the SIMSCI as it became known. And then moved within Morgan Stanley to run electronic trading, which was then a completely new thing. Back then, the firm was losing $1 to $2 million in Asia every Friday, basically because sales traders came in a little bit the worse for wear and struggled to write order tickets efficiently. And so the error cost was very, very high. So the idea was to implement front to back electronic trading, both orders coming in from clients via FIX, as that the fledgling protocol was then, as well as then routing those on our own internal OMS and ultimately down to the exchanges.
That's fascinating. And of course, those were the days. I mean, it was very interesting, 96 through 98, because we had this amazing dynamic where lots of innovative firms were coming in and starting to put everything electronic through their OMS into the floors. And then they were popping out on the floors beside some bloke or young lady who would pick up the order and then sort it out in a pit. And for some reason, it took the floor trading business quite a while to realize that actually it wasn't going to be that difficult to manage to wire another computer in between those processes and turn everything electronic.
Yeah, and look, and I think we saw this amazing period of electronification of the markets. I mean, if you think about it, if FIX had not been proposed, and Jim Lehman, or the late great Jim Lehman, I think has to be seen as one of the great drivers of this, was that, essentially Salomon and Fidelity got together and tested FIX version 1 between themselves to see if they could send orders. And then instead of keeping that as a Fidelity or Salomon protocol, they actually opened it up to the world and said, why doesn't everybody come and use this? And if you think about it, if that hadn't happened, we probably have 5,000 different electronic protocols today for communication between buy side and sell side and exchanges. And we would be drowning in a morass of different protocols. It would be a huge headache for every firm involved in electronic trading. As it was, very similar to Tim Berners-Lee and the World Wide Web. The fact that FIX protocol was formed and basically gave the protocol to the world for free meant that it was it was rapid and all-encompassing. And it had never been envisaged as a protocol to go down to exchanges, but that then became the logical next step. And so front to back, from buy side through sell side to exchange, and then into post allocations and post trade, you got FIX sort of right the way through, creating this straight through processing that made things ever more efficient and reduced the error rate enormously, obviously, to the point now where we have very little high touch trading relative to low touch. And most people are electronic sales traders rather than just sales traders. So an enormous revolution, which would not have happened without Jim Lehman and others sort of proposing to just give this away to the industry.
Yes, it's quite incredible, and how FIX effectively became such a gift to the entire industry, as you say, because it meant that every small tin pot market anywhere in the world could suddenly arrive and put itself onto a very similar platform basis as the rest of the world. And if you wanted to connect from wherever, the buy side environs of Boston or Edinburgh, as you mentioned earlier, all the way to somewhere in the midst of, I don't know where, in Asia that was off the beaten track, it was incredibly easy. So what was it like in terms of dynamic? Because you were involved with FIX from a very, very early stage. Was there a lot of pushback, or did the industry start to see the light very quickly?
Look, I think the industry saw the light very quickly. I mean, the very first Asia Pacific FIX committee meeting had most of the large sell sides, all of whom would normally have seen each other as competitors, and a large number of the biggest buy sides as well, people like Franklin Templeton and Fidelity. And, there was a real sort of coming together fairly quickly, aided by substantial amounts of drinks in Lan Kwai Fong after the meeting. But the group really coalesced. And in fact, we came up with the first FIX conferences in Asia, in part as a way of educating people about FIX, but also as a way of generating income. Because when you give something away for free, you don't have a revenue stream, unfortunately. And we had to pay, to keep the organization running and to keep developing the protocol. But everybody got very engaged in driving these conferences, which are now global. There are FIX conferences globally now, which are no longer just about education, because the protocol itself has reached a level of maturity, but much more about electronic markets in general, what's going on in the markets. So it was an area of cooperation between natural competitors, which was great fun. And that really happened globally as well. It wasn't just an Asia Pacific thing.
Oh, absolutely. I mean, it was quite incredible how FIX managed to take over the world very, very rapidly. And as you say, it's partly drawn by those global players, but also those players who are very regional. And I suppose for somebody like Franklin Templeton, who had a huge route of investing in the particularly the front end emerging markets. I mean, the more frontier markets through Mark Mobius and so on at the time, that must have been a big driver for them to be able to connect so effortlessly to the big banks of Wall Street and elsewhere. I hadn't really thought about that in terms of the fixed protocol dynamic. I always thought about it more from a sort of London-centric or New York-centric thing, where suddenly all the banks could talk to each other, and that seemed to be a great leap forward, and the buy side then followed them in thereafter.
Yeah, look, I mean, Asia is a very complex marketplace. The US is fairly simple in many ways. It doesn't have a lot of exchanges, doesn't have many currencies. Asia, you've got enormous complexity, multiple time zones, a vast geographic spread.
Yep.
And so, for somebody like Franklin Templeton trading 14 different markets from one desk, electronification simplified the process enormously.
Yes, that's a very good point. So your experience with FIX, obviously that was quite a fascinating moment in your career. You'd had this ETF success, you'd moved your way into the electronic trading market in Asia. What eventually got you moving out of Hong Kong?
Oh, crikey. Well, I did 10 years at Morgan Stanley in Hong Kong, and then I was approached by Instinet to join them to run Asia Pacific. I'd come across Instinet quite a lot because of the electronic markets, where Instinet was pretty much a leader. And so I joined Instinet. And I do like to tell the story that when I joined Instinet, they'd just not long since been bought by Silver Lake for $200 million. And about 6 months after I joined, they were sold to Nomura for $1.2 billion. And I was the only senior hire during that whole year. So I can only surmise that I was the one who drove that $1 billion of incremental growth in the value of the company. But at Instinet, I expect that was, just had a Hong Kong and Tokyo footprint at that time.
Yep.
And I opened the Singapore office and then the Australian office. And this spanned the time when Instinet was launching Chi-X in Europe in 2007. This is obviously in light of the MiFID I. And so we immediately started to look at whether Chi-X would be viable in Asia. And, we sort of zeroed in on Tokyo, Australia, and Hong Kong as the markets where we would like to push it out. The problem with Hong Kong is that the securities and futures law there specifically states that the Hong Kong exchange has a monopoly.
Yeah.
So that was sort of ruled out, but the project pushed ahead to establish Chi-X in Japan and in Australia, and through a JV with the Singapore exchange called Chi-East in Singapore as well. And I was asked at the time if I wanted to join Chi-X, and I said, no, thanks, I'll stay with Instinet because it actually has revenue. But then after about 4 years with Instinet, I was approached to join GetCo Asia, the electronic market making firm that went on to be KCG and then to be acquired by Virtu. And so I moved to Singapore to be head of strategic development at GetCo and help grow that business across the region to a point where we were about 10% of Japanese equities every day, 20% of Korean options, and expanding into other markets like Hong Kong and Australia. And really great exposure to what market making is about and how beneficial it is to markets. People talk about high frequency traders, but I really do like to think about it much more as high frequency market making, certainly for firms like GetCo and Citadel and Virtu and Jump, who are primarily two-sided market makers. And while I was there, I was approached by Tal Cohen, now of NASDAQ, who was at the time running in Chi-X Global, separate from Chi-X Europe. And we'd known each other at Instinet. And he was looking for investors to invest in Chi-X Global, which was basically Chi-X Canada, Chi-X Japan, Chi-X Australia. So over the course of about a year or so, we did all the due diligence and put together the investment. And I invested alongside QuantLab and Goldman Sachs and Morgan Stanley and Merrill Lynch and others, and sat on the board of Chi-X Global. And then for various personal reasons, because my second wife is Australian, and there was some pressure on me to move down to Australia, I held up my hand to move down to Australia and run Chi-X Australia, which had just recently launched at that time, and then moved down to Australia in 2013 to run that.
Right. Interesting. So you arrived in Chi-X Australia. I mean, Chi-X Australia had been going for several years by the time you arrived. I mean, it's never an easy business, that sort of startup of an exchange. It had been a real battle, but I mean, Tony Mackay had done a sterling effort in order to manage to at least lay the ground rules for what was going to be and remains a remarkable piece of competition with the incumbent ASX. I mean, leaving aside the ASX, it must have been fascinating to sit in Australia and be able to watch this platform grow from, I mean, a not unrespectable 4% to a remarkable 21% when you left, 4 or 5 years later.
Yeah, look, I mean, it was a great time, and a few things. I mean, first of all, yes, Chi-X Australia had been around for a few years when I joined, but it had only been live for about 6 months.
Right.
And the problem there was the pace of change in the regulation, the legislation that was necessary. So even though the government had made a decision in principle to open up competition, it took a very long time for the legislation and the regulation and the market structure to be put in place to actually permit competition. And on top of that, at the time, it was a requirement that Chi-X had to use ASX to clear and settle trades.
Mm-hmm.
Obviously, ASX had moved a lot of the pricing power to the post trade to minimize the benefits of competition. We've seen monopolists around the world use similar sort of ploys.
Absolutely.
So it was hard to get up and running. It was hard to differentiate. But one of the big differentiators was the entry of the market makers. So the market makers, came in and really drove the growth of Chi-X Australia, because when smart order routers are all about aggressive orders. Yep. They're not about passive orders. So the passive orders still get sent typically to the primary exchange, to the legacy exchange, and any new entrant is going to struggle to get that passive order flow that then generates the market data that triggers the smart order router to send the order. And so key is being able to get a better price at the bid or the offer to narrow the NBBO. And to do that, you have to get market makers on board. Right. So getting those market makers like Getco, like Virtu, on and quoting on the bid and on the offer at a tighter spread than the ASX was absolutely critical to building liquidity.
Yeah, quite an incredible achievement altogether, despite, as you say, the fact that certain of the wheels of bureaucracy moved a lot less quickly than the government fiat would actually have led you to believe from what their statements were. So, I mean, you reached this amazing milestone. You got Chi-X over 20% of market share, a perfect time to move on to something new. Tell us about what happened next.
Oh, well, I got fired. For various reasons, the company was sold to JC Flowers, or rather, Chi-X Japan and Chi-X Australia were. My objective, my goal had been to grow not just a cash equities platform to compete with ASX, but also a derivatives platform, and that had been in the planning. JC Flowers, however, came in and they didn't see eye to eye with me on that. They wanted to focus the business really on growing Japan. And so I was out. And interestingly, I sort of got a phone call not long after that from one of the partners at Bain in Singapore, Thomas Olson. And Thomas and I had been introduced to each other by Magnus Bocker, God bless his soul, when he was still CEO of the Singapore Exchange. And he introduced us because we knew that we both had a love of skiing and a side interest in market microstructure. So Thomas and I have met. Thomas lives in Bozeman in Montana most of the time now. Again, and he grew up there, so he grew up in the mountains, and we sort of had hit it off, and so he reached out and he said, "Would I like to be a Bain advisor?" And part-time thing. And I thought, well, why not? I'm still looking for a proper job. So I started that, and then the first thing he said to me was, "Would I like to go to Colombia?" And I said, "Well, British Columbia, it's not the ski season yet." He said, no, Bogota, the real Colombia. And so I actually ended up, a couple of weeks later, sitting in Bogota in the boardroom of the Colombian Exchange with Juan Pablo Cordoba, the CEO and president, discussing the failure of Mila to trigger liquidity and the problems of generating liquidity in South America. And over that lunch, we famously discussed, instead of just trying to link the exchanges, why not merge them? And that is a process that is now, 7 years on, proceeding at speed. But then I also started doing work with Bain, working with B3 in Brazil, working with Deutsche Börse, working with Singapore Exchange. And then all of this time I'd been interviewing for jobs, thinking I was still looking for a proper job, and got offered a job in Hong Kong. And when I told Bain that I needed to sort of, part ways, they said, well, you can't leave now. And they offered me a full-time job. And I joined Bain as a partner about, 5.5 years ago now.
Fascinating. So, I mean, you just sprinkled mentions of lots of parts of South America. And I mean, let's talk about that for a minute, because I think it's such a fascinating region. I mean, first of all, I don't want to necessarily go back and open other people's wounds, but you mentioned Mila. And obviously Mila was itself, a 5-7 year initiative by other parties to try and bring together markets. It didn't work. And then you've now gone through this 7 year, I use the word odyssey, but I'm not trying to deprecate it, because where you've got in the course of the last 2-3 years is spectacular. But clearly, once again, a little bit shades of Chi-X Australia. I feel, maybe I'm wrong, it took a while to really get that momentum building through not so much the markets, but through the structure, the political system, and so on that's around it.
So, Mila was a little bit about, similar to, attempts in Asia to link exchanges in ASEAN, so ASEAN Link. Yeah, they both shared the same fundamental flaw, which was they didn't address post-trade. Right. And look, let's be honest, this happens a lot. Post-trade is what gets ignored. Yes. And yet post-trade is incredibly important to generating liquidity. Yeah. So both Mila and ASEAN Link suffered from that same failing. And they were really trying to address a problem of how do you get liquidity in subscale markets? And we see this, and it's a particular problem in South America because of the ADR market in the US. So you've got ADRs of many of the listed companies trading in the same time zone, and investors in the US can buy them in US dollars. So there's more Bank Colombia stock traded in the US every day than in Colombia. And the problem with that is that the exchange of listings sees no revenue, sees no liquidity, sees no turnover. So you bifurcated liquidity. The ADR does end up being relatively expensive as well. And yet brokers who are not participants of the primary exchange of listing will obviously promote the ADR as a better way of getting into the stock to their clients. So there is this sort of liquidity leakage north of the border. We've just seen this week that 10 major companies have delisted from the Mexican exchange. Yep. Again, because of reasons of illiquidity. So that the logic behind putting Colombia, Peru, and Chile together is to build critical mass. B3 in Brazil has been very successful at building a lot of liquidity, and in large part based upon the success of one brokerage, XP or XP, which brought a lot of new retail flow to the market. and has built substantial liquidity both in equities and in derivatives. Other markets in South America lack that critical mass and size of Brazil. And so in putting together Colombia, Peru, and Chile into the new merged exchange, NUAM, that creates a critical mass by making it the second largest exchange in South America after Brazil.
Yes, that's a very interesting number, isn't it? Because I think all of us appreciate the sheer size and mass of Colombia, but we don't necessarily wake up in the morning and think of Peru or indeed Chile as being particularly economically vital. Although it has to be said, Chile certainly had certain resources that have been very, very useful over times, etc. What does that give us in terms of a sort of a dynamic? I mean, roughly what's the population of those three countries put together, or what's the sort of GDP marker? Any of those sorts of stats?
Yes, I mean, if you put the three countries together, the population is close to sort of 100 million people.
Right.
And the average GDP, because the average GDP of Chile is quite high. So
yes.
The average GDP of that block above that of Brazil, for example.
Mm-hmm.
And, you know, obviously we're looking at a region which is fairly rich in natural resources.
Yep.
You know, so we've got you know, major oil companies or a major oil company in Colombia. We've got mining companies in Chile. We've also got financial services.
Mm-hmm.
So, you know, by bringing and Colombia has been much more of a fixed income market. Chile has been more of an equities market. But by bringing them all together, we hopefully create a market that is both, you know, offers both fixed income and equity investments, and also gives us the ability to grow the derivatives sector. So, you know, Colombia has had a derivatives market for some time now. But Chile has only really had index futures and no interest rate or currency futures. And Peru has had no derivatives. So again, part of the objective of bringing these markets together is to create critical mass so that, first of all, we can attract market makers. Right. Because individually, none of these markets is particularly attractive to a market maker. Yeah. Put them together and you start to have something that's viable to attract market makers. Once we can attract market makers, we can build liquidity. Once we have liquidity, we can expand into derivatives and grow the derivatives sector, again, with the help of the market makers. And hopefully create a more efficient market then that attracts the international brokers to come down and join as participants, and therefore you know, be encouraged to promote trading in the home listing rather than in inefficient ADRs.
So it's very interesting because one thing, and I mean, this may just be my bias, but my experience of going to South America is there are remarkable barriers across borders for almost everything that you want to do in terms of transactional business. And I don't just mean finance. I mean, there's a huge amount of tariffs, customs duties are quite high and cumbersome and so on. What's it like trying to actually meld together a merger of three exchanges which are using three different currencies, three completely different governments? And we all know that there's been that traditional problem where governments have this somewhat silly, in my opinion, viewpoint that somehow or other their national stock exchange is some great national asset to be protected at all costs within their borders.
So, yeah, I mean, look, you touch upon a number of really interesting points there. I think one positive aspect is that Peru, Colombia, and Chile are all part of the Pacific Alliance, which is a, you know, South American initiative, which also includes Mexico, to promote trade within that region. So that there is at least a business growth focused initiative from a political perspective. Counterbalancing that, we've obviously had a lot of political change in the region over the last few years. And obviously we've had the pandemic as well, which hasn't helped matters. So Colombia, Peru, and Chile have all swung to the left in the most recent elections. And there has been some social unrest, and, you know, COVID hit these countries pretty hard. But I think in general, we found the politicians to be, if not proactively supportive, at least not obstructive to the integration of the exchanges.
That's very interesting. How do you find issues about, say, the legal base? I mean, one of the things I think that is a great advantage to many, say, of the Anglosphere countries is not just that they speak English, but the fact that they've got this British English common law background is uniting them. South American law based on Spanish law can be a little bit labyrinthine to those who are used to that way of working. Do you think that's a big issue for the development of these exchanges in the international community going forward?
Well, the interesting thing is that it's not required great changes in any laws to bring about the integration. It's much more been a focus of regulation.
Right.
So in all three countries, to a large extent, the regulation is left to the regulators. So the market structure is not being dictated by law,
Yep.
which is the opposite of, let's say, Hong Kong or
Right.
Australia,
Yes.
where the law is very specific. So in Australia, you have the Corporations Act, which covers all things to do with capital markets. And whilst that law is very old and no longer really fit for purpose, nobody really wants to take the cudgel to it and try and change it.
Yeah.
And in the same way in Hong Kong, again, the law dictates that the exchange has a monopoly.
Yes.
So under Anglo legal structures, generally speaking, the law is very prescriptive about the capital markets. Whereas in South America, it's less the law and more the regulation. And so, for example, in Brazil, we saw CVM, the regulator, and about 1 year ago, introduced new regulations that dramatically opened up the potential for competition in Brazil by making it easier for someone to apply for a license. And I think there are now 8 or 9 groups looking to potentially compete with B3 in some way, shape, or form in Brazil.
That's quite incredible, particularly given the fact that B3 has spent the last decade, since the first possible winds of competition were blowing through the Brazilian capital markets, essentially making sure that B3 happened. I mean, bringing together BM&F, Bovespa, adding in the bond CSD, etc., to create, an incredible Leviathan, which even trades car loans, if I remember correctly, amongst all sorts of other weird and wonderful securities. Obviously, Brazil is a kind of hot topic because it's one of those things. It's the first letter of BRICS, I suppose, which used to be quite a thing. It's very interesting to the outside world. A lot of people get very excited about it. And yet they've had this sort of 10 years ago or so, the first competitors were trying to get into the market, like ATG, which all found it very, very difficult. Do you feel that there really, therefore, has been a fundamental change of attitude, and these 8 or 9 groups are going to find themselves predominantly getting into the market?
Look, it's never going to be easy. As I said before when I was talking about Chi-X in Australia, it's not easy to compete. And post-trade is always one of the biggest hurdles. But yet, some of the fledgling or proposed competitors are looking to develop their own clearing houses. Got SIBO moving, partnering with one entity to potentially look at taking bids into Brazil as well. So there are a number of groups now looking at this, and given the size and dynamism of the market, it is a market that is ripe now for competition. And CBM, the regulator, as I said, is actively looking to introduce competition.
So what do you think drove that, as a matter of interest? Because 10 years ago, there was this kind of, yes, we're talking about competition, we're going to allow it, but actually when it got into the breach, it seemed to me that not necessarily just the regulator, there was a lot of resistance towards that competition happening. Have you any idea what's changed in Brazil to drive this forward?
Look, I think it's generally speaking, the fact that the current chair of CBM is pro-competition. And there have always been some people looking to try and compete, but it's just been very difficult to get over that regulatory licensing hurdle. And that was what changed at the beginning of last year with, I think it's CVM 131. I can't remember the exact number now, but it was a specific regulation that was introduced that suddenly makes it that much easier.
That's very, very interesting. Do you think, therefore, I mean, there's a sort of a pincer movement in one way because you've got the whole NUAM experiment coming together very, very quickly as one single entity with its individual regional headquarters for each country. You've got the liberalization of Brazil. Are we looking towards a kind of South American spring moment that might push forward the markets in other countries as well?
Look, I would certainly hope so. You know, I think that you're right that both of these initiatives are looking to bring more focus onto liquidity in South America. You know, one of the interesting things with NUAM is that a lot of the market making firms that we've mentioned before today are all very active in Brazil.
Right.
And again, you know, they've been looking at what else they can do in South America, and have really struggled to find anything that's got the critical mass. But bringing together NUAM gives them that opportunity to do something else in South America. So we found them all to be very, very interested because, you know, the US markets have pretty much sort of maxed out how much the market makers can do there. You know, sure, there's things like the Minneapolis Grain Exchange that MIAX is relaunching as a futures market. You know, MIAX is opening a massive new options trading floor in Miami. Miami seems to be becoming a major new hub with Citadel Securities and Citadel relocating to Miami as well. And obviously Miami has, you know, a very southward facing focus as well, with a large Latin population, and it being the sort of first port of call for most firms moving north from Latin America. So, you know, I think that there's a few currents here that are working in South America's favor.
Yes, and it's very interesting. The point you make about the Miami shift in a lot of US businesses is quite key, because certainly it would strike me that Miami is the best connected foreign airport to the world of South America, full stop. I mean, probably somewhere like Madrid is remarkably well connected in its own way to a lot of the former Spanish-speaking countries of South America, etc. But nowhere quite seems to get the whole of the country in one, or the whole of the continent in one flight, as Miami does remarkably swiftly. And that is an interesting pointer. One thing that just springs to mind, and it's a little bit of a micro point in that issue, though, is if I remember correctly, I mean, Brazil succeeded quite a lot in encouraging at least the flow from smaller proprietary trading market making groups into its markets through a central counterparty clearing sort of joint agreement with the CME. As I recall, you could keep your US dollars essentially in the US, and therefore you were protected from what was the historical legacy, well, particularly a Brazilian currency, where they've been through, what, 5 in our lifetimes alone. Do you think that that move really was a pivotal thing, or do you think that was just a complement to the fact that Brazil got its act together with its markets overall, and therefore encouraged the likes of these big market making prop firms to come in?
Look, I think it was at a point in time when CME was looking more at international expansion. I mean, if you look at the history of the CME, you know, they obviously did that original, you know, cross-margining link with Cymex back in the day, which really called
1982 or 3 or 4 or 5 or something. Yes, a long time ago. Yeah,
back in the days of Leo Melamed and Ang Sui Tien. So that obviously drove the growth of Cymex, and I think potentially CME saw a similar opportunity with Brazil. I mean, that linkage no longer exists today, but but B3 has built its own critical mass, and in fact, you know, the ties go very deep in some ways, because B3's matching engine Puma is actually a version of the CME's matching engine that they bought way back. But at the time, they actually bought the source code. So it's now bifurcated. It's now a completely B3-owned platform. But it is based on the CME's matching engine. But I think what we've seen with CME more recently is that it's really sort of brought itself back to focus very much on, you know, CME being everything run globally out of Chicago. I mean, they did do the deal with FEX in Australia to clear FEX's futures. With the CME Australia entity that had been set up a few years ago. But I think what we've seen is CME roll back to really being a Chicago-centric organization looking to trade everything globally from Chicago. But it did give that impetus to BM&F Bovespa, as then was, now B3, to attract the market makers. And the market makers have grown in tandem with the growth of the retail volume from Shispec.
Yes, that's a very, very interesting point. Certainly the cyclical nature of what CME has done over time and how it was much more internationalist at one point in time. And now it sits as an exchange where, when I'm asked to surmise it, I say it's got one great advantage and one great disadvantage, which is it's the epicenter of US dollar trading, and therefore that's its great advantage, but at the same time could prove its Achilles heel depending on what happens in the future. We got a fascinating pointer and also to a degree a question certainly emerges from it from me. John Falk, good evening. Hello, John, great to see you. If Euronext managed to merge exchanges across border, then in principle it should be possible in Central South America. But as John says, political nationalistic considerations come into play. I'm interested here actually in some of the minutiae, and maybe you can't talk about this because I know NewAm is still rather nascent, but one of the quirky factors of Euronext, if I may say so, is the fact that, that infamous golf club, the Euronext Regulators Collegiate that gets together, they do have incredible pointers where they absolutely delineate that certain products must trade on one particular market, not the other. I'm thinking, for example, of ETFs, which surely in the euro currency zone could all trade on one single platform. But no, each of the different individual members of Euronext insist they are traded under their remit when it's a Dutch customer, a French customer, or whatever. What sort of issues do you have like that with NewAm? Because obviously you've also got the added trickiness that you're dealing not in one single currency, the euro, but several, John.
So a couple of things. So first of all, Euronext to some extent has been pretty successful in, merging everything onto one trading platform. But what Euronext never had to do was to really focus on post-trade. It has turned its mind to post-trade more recently, with the move to set up Euronext clearing. But, until this point, Euronext was predominantly cleared by LCH ClearNet and or by EuroCCP. And then the depositories were pretty much collectively, apart from Lisbon, bought by Euroclear. With NewAm, we're looking to merge not just the trading platform, but the clearing houses and at least the Peruvian and Colombian depositories to some extent. The NewAm does not own CCLV, the Chilean depository.
Mm-hmm.
The ambition of NewAm, if anything, is greater than Euronext in that it extends into all the post-trade and covers a full suite of derivatives across all three markets as well. Which again, Euronext is only really starting to get into now. But I mean, Eurex dominates in European derivatives really these days. So it's way more ambitious in some ways. Yes, we have to deal with multiple regulators. Yes, we have multiple currencies, and a lot of these issues will need to be worked out. And I don't think anybody's suggesting that it's all going to be smooth. But nevertheless, the will, the desire, the support of the board, the participants, and everybody is there to make this happen, because everybody knows that this is critical to maintaining a healthy capital market across the region.
Critical to maintaining a healthy capital market in the region. I think that's something we all echo. And thank you very, very much, John Falk, for your question. Really, really good to see you. I hope all is well with you in Belgium. You don't have the stormy weather that's been affecting, well, certainly the UK in the course of recent days. So, John, I mean, we've talked a lot about South America. It's a very, very interesting position. You spent a lot of time in Asia. I mean, where do you see the opportunity, or where are the exciting, perhaps, hot spots in Asia at the moment where stuff might be happening in the near future?
Oh, crikey. Asia is such a varied marketplace. It's hard to know where to start. Look, I think, interestingly, Hong Kong is coming off, the back of a lot of growth that has been supported by Chinese IPOs, which seems to be slipping away. So I think Hong Kong, under its new CEO, has some interesting challenges. But at the same time, I saw this morning that they're starting to see some success now with their MSCI complex of derivatives, with a record for MSCI India contracts traded yesterday, over 12,000 contracts. So, that's in Hong Kong. In India went T+1 before anybody else and is already starting to talk about T0. And India has overtaken Hong Kong as the fourth largest market by market cap in the world. So I think India continues to be a market of great interest. Australia, let's not dwell on the challenges of the CHESS replacement too much. But I think Australia, still offers a lot of opportunities, and be interesting to see how SIBO, as Chi-X Australia was, now SIBO Australia takes up those challenges and opportunities under Emma Quinn and her team. And I wish them well. Other markets around the region, I think Korea, we're now going to see competition in Korea with the next trade ATS, right, probably going live within the next year. Given the volume of trading and the fact that the next trade is backed by the largest domestic brokers, it'll be very interesting to see how that plays out. So, as always, there's a lot going on in Asia. Almost too much to cover. We could take a full hour just on the Asian markets.
We could have a program, and it is, as you say, so multifaceted in so many ways. The one thing I think is very exciting, actually, is with the way that Connect has really taken off for Hong Kong. The idea that they're going to manage to now have Chinese yuan, renminbi yield curve futures traded via Hong Kong, I think could be absolutely fascinating. I mean, I think that has an opportunity to explode the market in Hong Kong for Hong Kong exchanges in a way that we have not seen in any market for a long time, because obviously all other massive major currencies are mostly on stream. But then again, I suppose the same thing could also be said about India when they perhaps managed to get around to having an offshore market, perhaps in Gift City. I see they've liberalized the use of alcohol finally in Gift City, which will hopefully help a few Westerners manage to get there and drown their sorrows if they're in that financial center. John, this has been incredible. I mean, we've had a round the world tour, which is quite incredible. And we have one final question I'm going to offer. Michael Smith from Exact Pro. Hello, Michael. Good to see you. What does John think about the yield broker acquisition in Australia by Tradeweb?
Hi, Michael. How are you? Nice to see you. Look, crikey. I really don't have an answer on that one, to be honest. I don't know what Tradeweb's objective is with Yield Broker. I mean, Yield Broker has been a fairly successful single market electronic fixed income platform that it was originally set up by the banks collectively, and then ASX bought a minority shareholding in that a few years ago. And now Tradeweb, who are obviously, dominant in electronic trading of bonds, have acquired that, which gives them, access to the Australian market that they may not have had before. But it's difficult to see how you would grow Yield Broker outside Australia. It's a very, Australian-centric platform, or indeed, whether that can move on to Tradeweb platforms or whatever. I guess it's just really Tradeweb expanding its footprint more than anything.
Yeah, I must admit, I'm inclined to agree with you there, John. I mean, having seen the hurdles, and you mentioned this earlier, the hurdles that the CME had to jump through in order to be allowed to be in Australia, it probably made a lot of sense to just pony up the cash for Yield Broker, and then you got instantly a license to manage to move forward. I think that's quite a fair point. Thank you very much, Michael Smith, for your question. Thank you also, John Falk, for your question. John, we're at that point in the show where I'm aware of the fact that you're soon going to be departing from Whistler, but I was interested to know, where do you think the capital market revolution goes next?
So, two thoughts on this. First of all, and you may disagree with me, I'm a big believer in tokenization. And I do believe that the area that will be most impacted by tokenization is alternatives or private assets, which far outweigh the size of the public markets today. So, we do believe that tokenization is very suited to private assets, which have, an antediluvian post trade at the moment.
Yeah,
can revolutionize creating greater liquidity, because as big pension funds around the world have to invest more and more in alternative assets because they've run out of public assets to invest in.
yeah.
Their difficulty is in getting any really truly accurate mark to market because there's so few liquidity points in these assets. So by tokenizing them, fractionalizing them, making them more tradable, we hope to see more liquidity in these products, which will make valuations more easier. And I think at the same point with tokenization, what we've seen is that all the major custodians have been working with Fireblocks or Copper or somebody like that to build a parallel infrastructure to support custody of tokenized assets. So, and I'm not talking about crypto here. I am talking about tokenization of either real assets or existing fixed income or equity assets at some stage in the future. But at some stage, we do believe that all assets should be tokenized in the same way that most assets have now been dematerialized to some extent.
Yeah.
So a logical next step. That's my first sort of point on where the capital market revolution goes next. But the second point, which I think is an interesting one to note, is that we do believe that carbon markets will continue to grow, and they have to grow in order for us to correct the problems with climate change. Now, one of the problems at the moment is that most carbon markets have been established as a walled garden. Every country wants to have its own carbon market. Where capital markets come into place, what capital markets have done really well over decades, centuries, is to bring capital to the place it's needed. And this means that carbon has to become a much more globalized market. So that, for example, Aramco capital that needs to invest in carbon credits can help reforest the Amazon.
Yeah.
You've got to bring these marketplaces together. You can't just have a Saudi or a Brazilian carbon market with both supply and demand from the same place. You have to bring together global supply and demand. That's where capital markets have been hugely successful in the past. And that's where I think they can be hugely successful in the future at helping us to save ourselves from climate change.
Two fascinating points altogether. I have to say, I think they're very thought-provoking. I do agree with many of the points that you're making, if not all of them, throughout the whole thing. Thank you very much for Michael Smith. He's been making a couple of comments there. Re-tokenization. Look out for the Artex exchange, he notes, which is certainly an interesting development amongst many in that world of art tokenization. He agreed also with your comments about the yield broker pointer, but it means that the great team have been split up. He thought John Falk had retired. I do believe John Falk has retired, but it's lovely to see you on Tuesdays, John. We're really enjoying your elder statesman presence here. Thank you very much for joining us. And it's good to hear him listening in, but Michael Smith feels like an interloper listening into two of the giants of our industry. Well, I can certainly think of one giant of the industry who's here this evening, which has been our absolutely marvelous guest this evening, John Fildes. Thank you very much for your comments, Michael Smith. Thank you very much for your comments, John Falk. It's really been a pleasure chatting with you today. Let me just say very finally, I didn't manage to catch it earlier. Our book of the week this week, Andrew Ross Sorkin's Too Big to Fail. If you want to know more about that, get to our weekend Exchange Invest edition, which is out on Saturdays and absolutely free. I'm going to be back next week with another thrilling, exciting, incredible show. But for now, we've been talking on the cutting edge of innovation and all of the many things that it happens from South America right around Asia and through the world with our wonderful guest this week, John Fildes. John, thank you very much. Ladies and gentlemen, have a great week in Life and Markets.
Thanks, Patrick.